Ladies and gentlemen, good day and welcome to the Xelpmoc Design and Tech Limited Q4 FY23 earnings conference call. As a reminder, all participants' lines will be in a listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note this conference call is being recorded. I now hand the conference over to Mr. Ravi Udeshi from EY. Thank you, and over to you, sir.
Thank you, Bikram. Good evening to all of you. Welcome you to the Q4 and FY23 earnings conference call of Xelpmoc Design and Tech Limited. We have sent you the press release and the investor presentation, and the same has also been uploaded on the Xelpmoc website as well as on the stock exchanges. In case anyone does not have a copy of the same, please do write to us. To discuss the results and the outlook for the future going forward, we now have with us today the top management of Xelpmoc, represented by Mr. Sandeepan Chattopadhyay, Managing Director and CEO, Mr. Srinivas Pura, CFO, Mr. Madhu Pumalil, Group President Strategic Initiatives, and Mr. Srinivas Kolipara, Group President Startup Ventures. Before we start the call, I would just like to remind you that the safe harbor clause applies. With that said, I now hand over the call to Mr. Srinivas Pura. Over to you, sir.
Thank you, Ravi. Good evening, everyone, and welcome to Xelpmoc's earnings call for Q4 and FY23. I hope you and your family are doing well. We saw a headwind in the startup space on account of funding slowdown witnessed in the emerging technology space. However, we foresee and started to diversify into corporates. I will touch upon this strategy in the later part of my speech. Our operating revenue for the quarter was recorded INR 33.2 million as compared to INR 18.6 million in Q4 FY22 and INR 39.1 million in Q3 FY23. We saw a renewed interest from our clients, which led to this year-on-year growth of about 79.1%. Essentially, we saw a revenue decrease of about 15.1% as stated earlier due to the ongoing slowdown. Operating EBITDA adjusted for the quarter was INR minus 23.5 million as compared to INR minus 44.2 million in Q4 FY22 and INR minus 24.8 million in Q3 FY23. I would like to give some context to the said decrease in EBITDA loss in Q4 FY23 as compared to Q4 FY22. We have seen a reduced attrition in the IT sector on account of ongoing slowdown. Further, we were in expansion mode earlier, and now the said expansion has completed, due to which we saw our investment in staff cost and operating expenses bear fruits in the form of increased operating revenue. We had highlighted this decrease in operating costs in our last call, and going forward, we expect our operating costs to be stable. Net loss for the quarter was INR 22.6 million, partially due to 8.2 million of ESOP expenditure and increase in depreciation and amortization. The depreciation and amortization increase was due to increase in fixed assets and right of use of assets. This, in comparison to a net loss of about INR 49.5 million in Q4 FY22 and net loss of INR 47.9 million in Q3 FY23. Of the FY23, our revenue from operations was 147.4 million, an increase of 83%. Our EBITDA loss was of INR 85.2 million compared to a loss of 63 million in FY22. And our net loss was rupees 160.4 million compared to 128.3 million in FY22. Regarding the change in revenue, we would like to state that our revenue stream was diversified with startups, corporates, and governments forming 34%, 39%, and 27% respectively of our FY23 revenues. We expect focus on corporate going forward, more focused on data science will enable us to sustain and recent increase in the revenue movement in future apps. Our team size is about 115, including employees, interns, consultants, as compared to 117 in Q3 FY23. Till date, we have served 59 clients, and our sustained interaction with the clients is the foundation for our performance. The fair value of our investments in portfolio companies stood at approximately 404.2 million as on 31st March 2023, as compared to INR 623.6 million on 31st March 2022. I would like to give some context to the decrease in the value of portfolio investment. As stated in the start of my speech, there has been an overall slowdown in fundraising activity in the new economy segment. Some of our portfolio companies were in the fundraising stage for their growth plan. The slowdown affected them, leading them to curtail their plans. Hence, now are operating at a significantly reduced scale or exploring other options, including strategic sale. I'll discuss some of this in detail now. Now, Fortigo. Fortigo has finalized an agreement to be acquired by a strategic partner. The transaction is expected to be consumed by end of June. It is largely a stock swap arrangement wherein CCPS holders who also have LP rights would get swapped into acquiring it. The common shareholders would be part of buyback after factoring LP rights of the CCPS. Therefore, we expect to get a share consideration of INR 11.1 million as compared to our original acquisition cost of INR 0.01 million. The total amount of investment by all investors in Fortigo was roughly approximately around 120 crores. Rise Fintech, which is owned by its brand Slate.ac, is at advanced stage of sale of its product to another entity. All investors currently invested more than 15 crores. Currently, Rise Fintech is not sure of total amount which it can raise through this product sale. Hence, we are unable to give any further update on this at this point of time. Our cost of acquisition in Rise Fintech is INR 5.8 million. Snaphunt revenues have increased 35% year-on-year in the quarter ended March 2023. The total number of employees on its website has grown by about 62% year-on-year. The total number of job seekers has grown by about 125% in the same period. It is facing some headwinds due to layoffs in the tech and related sectors. However, it has still around 6 months of cash. Considering the current cash burn and its management expect it to turn profitable within the set time. New revenue is nearing the triple-digit mark in INR millions, and its revenue has grown by around 160% year-on-year as compared to the last year. Their annual recurring revenue has grown around 50% over the past year. They have 11 customers, including 1 in auto and another 10 in contact center. They have slightly reduced its valuation on a conservative basis, looking at the current market scenario. New founders expect it to reach breakeven by this year end. Woovly is backed by AI-driven brand-backed user-generated content, as its AI technology recognizes both products and brands. It has 40,000 plus influencers, which are followed by 150 plus million followers. It has more than 8 million users who are generating 319 million videos views per month. Woovly has recently raised about 10 crores from one of its existing investors. PSIM, Bizarrely, and Pitstop Press both are looking at only organic growth, will be in a self-sustaining mode for the next couple of years. Pencil, also known as 1.6 Technology, it has on April 2023 more than 30,000 signups. 800 plus authors who have published more than 1,400 titles. They are still burning marginal cash. They are still in process of a merger process. First, they will do a fundraise. Even excluding the proposed merger, the founders are confident of self-sustainability by end of this financial year. Xelpmoc enters startups mostly at an incorporation stage or pre-seed funding or pre-revenue stage. Majority of our startups have just started revenue generation and are still burning cash. So unless there is cash, it may be difficult for them to sustain their current level of operation. As of now, the ecosystem is seeing a significant pace, and we are looking at scaling up Xelp's own products and services. We will be focusing on more revenue generation from corporates, focusing on data science, artificial intelligence, and machine learning. We will be looking at only onboarding startups and a selective basis if they look very attractive to us. With this, now I request Ravi to open the floor for questions and answers.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. We will wait for a moment while the question queue assembles. Ladies and gentlemen, to ask a question, please press star 1 now. Take our first question from the line of Ishit Desai, an investor. Please go ahead.
Yeah, thank you for the opportunity, sir.
I'm sorry to interrupt, sir. Your audio is not very clear. Please speak close to your mic, sir.
Is it better now?
Yeah, please go ahead.
Yeah. Sir, this is regarding the Fortigo acquisition which you have mentioned. So the valuation, since they are holding 4.9, the acquisition is happening at a valuation of close to 20 crores. Is that correct, or is there a different structure to it?
So basically, there's a different structure because it's in the advanced stage. The company has not yet signed a definitive agreement, so that's the reason why we are not in a position to share anything. Whatever information that we have shared with the Fortigo, we are doing it. Please understand that CCPS holders have invested close to about 120 crores. And whereas Xelpmoc investment in form of equity is close to about 0.01 million. Against that 0.01 million, we are expecting that a buyback will happen where Xelpmoc would be able to get close to about 1.11. As you know that any of the shareholders agreement, the first right or the liquidation preference would be given to the financial investors at least to cover the cost. So definitely the first priority would be for the CCPS. As and when we have a definitive agreement in place where we have a clear visibility with respect to how this has happened, etc., where we would be in a more comfortable position to share with you, we will definitely do that.
Fair enough, sir. Understood. And sir, apart from Slate, there are 3 more investments which are not appearing in the current portfolio, which is PHI Robotics, Learning Hacks, and Graphos. So all these are also written off as of now?
No, as far as Graphos is concerned, Graphos is the OCPS, optionally convertible. So that has been redeemed. And as far as the robotic is concerned, it was a very small investment. The company is not going anywhere. So in fact, that has been written off. And as far as the learning hacks are also concerned, learning hacks also, we are exiting at the cost.
Understood, sir. Also, sir, any update on Signal Analytics? I mean, it's been last 3 or 4 quarters since we have started working on that. And we were looking at different modules to begin with, and probably by this time we're looking to start monetizing on that. So any significant updates on that part?
Sunil, should I take that question? Yeah, that's what I
mean.
Yeah, okay. See, yes, that's in progress, and there is also a little bit of a, I would say, sluggishness in the overall market now, which is basically our target customers. The deliberation time is more than we had anticipated in terms of landing projects, in terms of getting POC opportunities, or even after the POC, the decision-taking time is becoming longer. But one of the products, especially, we have more or less productized, and it's now in a format which is, takeable in a kind of mostly as-is format to integrate to the databases and will still be custom. But the overall UI, UX, the overall query patterns and all those have been standardized. and that's the first product which we are slowly trying to get into the market. So that's in progress as we speak.
And this will be working in sync with the Soltrax acquisition and one or two other synergies we are building. So all of them are working together on this piece, right?
Soltrax belongs to the Signal part of it, which is on EduTech. I'm talking of the generic other products which are Xelpmoc part. So it's all of these things are going together, yes.
Yeah, understood. Perfect. Fine. So I'll come back in the queue. Thank you.
Thank you.
Thank you. We take a next question from the line of Sudhir Dugad, an investor. Please go ahead.
Yeah, hi. Thanks for the opportunity. Am I audible?
Yes, you are, sir. And you may speak a little close to your mic, sir. Thank you.
Okay, 1 second. Hello?
Yes.
Am I audible now?
Yes, you are. Please go ahead.
Yeah, I wanted to check on what went wrong with Fortigo with regards to the reduction in valuation. That is my first question. And second question would be, we were looking to ramp up our product side of the revenue. So what's the status on that? And thirdly, in terms of monetizing our other startup investments, where do we stand in terms of our portfolio value and the valuation which we are hoping we would recover?
So, Sandy, I'll take the first one, maybe second and third one you can take it. Again, as far as Fortigo is concerned, I have covered it in my opening remarks. Fortigo was trying to raise funds. They tried their level best. They were also looking at some sort of merger, acquisition, etc. But finally, as I said, Fortigo has finalized an agreement to be acquired by a strategic partner. The transaction is expected to be completed by June, and as the financial investors or CCPS holders, they have invested close to about 120 crores, so they have liquidation preference, right? So the existing CCPS holders would be doing a share swap, but whereas the equity shareholders, they are intending to buy back from the equity shareholders. So we have invested 0.01 million in Fortigo. Against that, we are expecting that through share buyback, we will be getting somewhere around 1.1 crore. Hope that answers my first question.
Yeah.
Can you just repeat your second and third question just to refresh it and not having?
Yeah. So the second question was regards to our product revenue, which we were planning to ramp up.
Correct.
To basically get some support, which we are not getting from the startup side.
Correct. So I actually covered it just to the previous question person. I had told that we have ramped up, but there is some sluggishness in the overall market, which is our target audience for the customers. And we have productized one of the components, which was Expand. That's the first one we're going to market with. That has more or less been improved and made into a kind of a as-is off-the-shelf kind of a thing for most of the part. Integration to their databases will still be custom made. But the front end, the query parts of it, those have been standardized. And that's the first product we're going to market with.
And please understand that still we have just developed. Please go ahead.
No, sir, please you go ahead.
So please understand that we have just developed that particular product. We are yet to take to the market. As and when we get a traction, we will update the investors.
Okay. And one question was that any timeline with regards to our losses getting reduced and we getting to break even?
So as far as that thing is concerned, right now we will not be able to give any visibility. The company is working on it and to ensure that how to improve our top line on revenues, maybe corporate services, working more on data science, AL, ML, and productizing a couple of things which we have been doing it for the last 6-8 months. And that's the way we are approaching right now. But still, we are not sure with respect to what would be the success rate of the products.
Okay, thank you.
Thank you. In the interest of time and fairness to all participants, ladies and gentlemen, please restrict questions to 2 per participant. If you still have more questions, please join the queue afresh. We take a next question from the line of Stantikam Sojanya, an investor. Please go ahead.
Hello.
Please go ahead, sir. We can hear you.
Hello, sir. Good evening, sir. Hello.
Yeah, please go ahead. Please go ahead. We can hear you.
Nowadays, valuations of a lot of new tech generation companies, including yours, was melted down, sir. Market is expecting only profit. What is your future prospectus, sir, to get profit?
As I think Srini just covered it last time, we have said that in the opening remarks also and all, that we have decided that yes, the market situations are different than what we would have wanted it to be. We are cognizant of that. For the moment, we are reducing our focus onto startups on a big time basis like we were doing it. As I said, we were always focusing more on the value creation more than profit creation. We are focusing more on the services part of it and trying to keep on the profitability because we have to sustain, we have to make sure we're profitable. So those are there, but that change is happening. As you can see, the upliftment of the revenue is one indicator of the focus there. But also detaching ourselves from the startup and reducing those parts and making sure we go to the path of profitability is there. But even in services and all, there are headwinds, and I think that will stabilize over time, and we will be looking at that part. We are working on profitability, but to be very frank, as of now, we are completely focusing on making it as efficient as possible and making sure that we do the best possible. As clearly, when with the profitability and all will be, we don't have a kind of a clear part as right now. Whatever we have thought before and all, unfortunately, has not worked out the way we thought. There are things that we could not anticipate, and we didn't do the right predictions. So from now on, we want to actually work it out and see onto that part and make assumptions which don't work out.
Okay, thank you.
Thank you. We take the next question from the line of Karan Sharma, an investor. Please go ahead.
Hello, am I audible?
Yes, you are. Please go ahead.
Yeah, my name is Karan. Thanks for giving me opportunity to ask questions. So I had 2 questions. One was, it was mentioned in the call, Boobly has raised 10 crore, right? So could you please tell at what valuation was this raised? Second, yeah, I know you have answered it, but like we were told that Xelpmoc would reach at break even by Q4, then it was revised to Q1. Can you give us some idea like when we'll be reaching to break even? Because it is difficult for us also. Yeah.
Now, we completely understand that, but to be very frank, we have tried to navigate the kind of atmosphere we are in, and as of now, we are not very clear. We are just trying to make sure that the profitability on the unit part is what we focus on, retaining the team, making sure that all the good work we have done doesn't get lost in this storm. That's the focus on that part. As we get clarity, we'll give you when we have a clear objective. It's no point giving a goal just for the sake of giving and not being able to meet it.
Okay, so one more specific thing. Are we planning more ESOPs in near future quarters?
So whatever ESOPs grant that we have given, we have already informed to the exchange. And basically, in case we are in process of hiring one of the senior person, especially a CRO, maybe in that case, if you have to give, maybe we will take NRC approval, board approval, and accordingly we'll intimate to you. But as of now, we are not looking at any fresh ESOP to be issued. But yes, in case if we are recruiting senior people and to motivate them, because even the earlier ESOPs what we have given, they are given at a higher value. So.
Okay, so whatever will be the ESOPs will be submitted to exchange.
Yeah. And apart from that, just to cover your earlier question, in case if you look at it, as I covered in the opening remarks, 34% was the revenue what we generated from startup for the previous year. And we all know that the startup ecosystem is under a tremendous pressure. The existing startups, especially people who are at the pre-seed funding stage, they are not able to raise funds. even though the investors do have funds, but they want to wait and watch how it turns out, and then they want to go ahead and invest. Now, as far as Woovly is concerned, Woovly was also planning to raise some different investors, but apparently they were not able to raise funds. Then one of the existing investors who reached out and he said that he is going to invest 10 crores the previous round of funding. That's how they have done through a right issue.
Okay.
Hope that answers my question.
Right issue, but at what valuation?
So I think it was close to about 4 million, 4.5 million, 4 million.
Okay. Thank you.
Thank you. We take the next question from the line of Amutan Iyer, an investor. Please go ahead. Amutan Iyer, your line is... Yes, please go ahead.
Hello, good evening, and thanks for this opportunity. This is the first time that I'm hearing now that the management is focusing or going to put its resources on product and services aspect of it. So my question is whether this is just a forced change, or is it going to be a long-term sustaining strategy of putting in more resources in terms of manpower and finances in terms of our own products and services. So this is the question. And connected to that is whether we are going to charge whatever resources we are putting into our startups in a different way from the past. So this is question number one. Question number two is in terms of the drastic write-down in terms of the valuation of Portigo. We have always heard that Xelpmoc is conservative in terms of valuing its investments. So wouldn't it have been prudent that this could have been reviewed more closely every quarter rather than kind of doing it at one shot where you even blindsided? Thank you.
I'll take the first question and the next, Rini, if that's okay with you.
Yeah.
Okay. So it is a forced change, that's for sure. But it is not a forced change in terms of direction. It's a forced change in terms of the timing of when we wanted to do it. We surely wanted to make sure that we go for more for value growth than profit growth, at least for the first 7-8 years of our existence in the public market. But given the dire situation and all those things, we think it's prudent to bring forward our plans of getting focused on the products and services. If you have been a follower in the sense of following what we have been talking about, we had already started the shift slowly towards the services and the product thing from last financial year, fourth quarter. And we had said that it would be a transition over time, and the next financial year we'll do a mix and match of both. As of now, we have put that other part on steroids, and we have said this is the part that we need to now focus on much more closely. That said, the startups and all are not being ignored. We have a huge amount of learning, a huge amount of quality people and experience, but we surely would change the mechanics by which we engage with our startups so that our exposure is minimized and sustainable for us. That hopefully answers your first question. If there is any doubt, if you can ask me or to clarify right now.
Yeah, added to that was whether we are going to bill them any differently. The 34% business that is coming earlier, I've heard you say that we are kind of billing them very nominally, just kind of covering our cost.
So we are treating them, that's what I said, the focus has shifted now to make sure that this is where the primary focus of bulk of the personnel and management is focused on the services now. So if that is your question of management bandwidth, yes, that is where the focus is going. But the specialized persons among us will still go on with the startup part.
Got it. Are we going to bill them separately? This is the question. Earlier we said we were billing them at...
Bill whom separately? Oh, you mean to say the new startups and all? Yes, I think we will look at what the startups are coming. Like you said in the opening comments, we are looking for much later stage startups now. So yes, we will be able to build them.
Thank you. Ladies and gentlemen, to ask a question, please press star 1 on your touchtone telephone now.
I think there was one more question left. He had asked about the prudence about Fortigo valuation and if you could have anticipated it before. Is that correct? Yeah.
Yeah.
Do you want to take it or do you want me to answer?
Yeah. Yes, and you can go ahead.
Okay, fine. I think we have been extremely prudent and we have actually been monitoring it. Actually, we talk to entrepreneurs almost on a weekly basis, if not on a daily basis for most of the parts. And we are cited and all. It is just that they were in anticipation of some funds. And then somehow with this, all the happenings here, it unfortunately did not materialize. And then certain events happened which were in a way a bit too fast. And this was the only way left to get that thing to a kind of a conclusion to some extent and protect maximum part of it. Unfortunately, we were not on the saving part for ourselves. We just got a great return in that sense from our investment perspective. But from a write-down perspective, it is quite a big shocker. And that's unfortunately the way the dice rolls. I had always said that these sort of black swan events may happen. That's the risk of the startup investments. But I don't think it is a lack of prudence on our side that we missed it. We were extremely honest. We were extremely focused on getting the right valuation, and we are much more conservative. We did not tell the interim valuations and which the proposed fundraise was going to happen. We looked at the last fundraise and kept it at that. But unfortunately, this has happened. So that's what we can say. And yes, from I can speak as a person who's been on the project from day one. It was our first project. In many ways, it was a flagship project. It is something that obviously is a big sentimental loss for us as well.
And as far as the valuation is concerned, when we compare March 2022 versus September 2022, we already toned down the valuation as far as the Fortigo is concerned. And as I said in my opening remarks, we entered or we are associated with this startup at a very early stage, at the incorporation stage or a pre-round of funding. Now, these companies are yet to generate revenues, they were burning cash, and as far as these companies which are at a very early stage, the success rate would be either this side or that side. In case if it was we entered at a Series B, Series C level, then the success rate would be different. Stage round of funding, incorporation round, the success rate would be different. That's the reason why we are getting it at a very low price. Like I said that 0.01 million was invested in Fortigo. But whereas the other investors, they have invested at different stages, including as high as about 450 crores.
Thank you, sir. Anyone who wishes to ask a question, press star 1. We take the next question from the line of Rudresh Kalyani from Kalyana Foundation. Please go ahead.
In the balance sheet, there is a goodwill of 89 lakhs. What is that about? Hello?
Just 1 second. Yeah. It's a signal consolidation. It's an Ind AS adjustment.
Pardon?
We have a subsidiary company called Signal where the product is developed. So on consolidation, it is appearing as an Ind AS adjustment.
Okay, fine. And in the previous year, you had a strategy to hold a majority stake in the upcoming startups and hold few of them. Will you stick to it, or will you go ahead with having a minor stake and having a number of startups? What is the strategy going forward?
I think as we said already that we are not going after, so whatever has been there and whatever we have started, we're not going to backtrack from that. We're not going to abandon that. But going forward, I don't think that is going to be the focus for us, because majority shareholding also means majority time focus from our end. As I said, the majority of the focus of the company would now be on the services and the products part. So I think in the near future, we would not see some of those coming up that we had all planned. Some which were in the works, which are almost near completion now, we'll finish that kind of range, and then probably we will just keep it as it comes, which is on a value basis, which is on the current focus basis of making sure we are revenue positive even on those ones.
Mm-hmm. And just to add to what Nipana said, that Nipana said, like whatever we are right now doing the research, debating internally, discussing, reviewing the market, etc. A couple of things are ongoing. In case if those comes, we will surely inform to you in case if those are comes up.
Thank you. We take the next question from the line of Ishit Desai, an investor. Please go ahead.
Yeah, sorry, this is a follow-on question from my side. In one of the discussions, yes, you mentioned that you are now looking at much later stage of startups to engage with, right? Obviously, the focus will still remain on product and services, but on a selective basis. So from an investment perspective, it would also mean that you will need a much larger capital to have any stake in the company. So are we looking at any sort of fundraise specifically for that, or it will still be very selective?
So generally, in case if you look at us, when we say at a late stage startup, again, partnering with them for services render in form of equity plus cash, where we will be rendering services for them, whatever is cost, we will be charging in form of cash, whatever margin would be there, we would like to pick up in form of equity. And these partnerships, we said that we wanted to do with companies who already have prototyped this, gone to market, having some visibility or revenue, or they started generating revenue. We wanted to partner with such companies. So we will not be doing any financial investment for them.
Understood. Fine. And sir, if to Mr. Sandeepan, if you could, sir, give some update on Signal, FirstSense, and Mayaverse, which are more recent investments. So if you have any update regarding any of these three companies, where do we stand broadly?
Yes, correct. So Signal, obviously you have seen it's a structure, right? So I guess the updates are as follows. It has been already notified, and I'll stick to those parts of it. The content company is more or less getting into self-sufficiency. It is, I think, decently operating-wise doing well, unit economics-wise. The main product which we are making from Signal parent itself, we should be able to put it into beta in another 2-3 months to do field testing and all before we deploy it. In the EduTech, we are taking a little bit of a slow, cautious move there instead of trying to do it, and we don't want to go with heavy marketing and all, but kind of going to the product propagation by reference kind of a thing to see the product quality is the main marketing aspect. So we worked on that and we're doing it. And FirstSense, we are trying to get the first POCs and stuff like that. And we are also deliberating on a different kind of a structure for it so that technology that we have built in the core sense, we can deploy it in much more productized ways through our current plan of, focusing on the services and the product part much more comprehensively. So we'll keep you updated on that part. As of now, things are more or less on that aspect in completion. FirstSense is the only one where we are looking at restructuring it for certain strategic aspects.
Sure. And so the third one?
Yeah. Oh, sorry, Mayaverse, right. Mayaverse, the first cut, I think we started the actual fund deployment and all very recently, but in between the work in the stealth mode and in a strike mode has already been going on. We are looking at the first cuts of getting the planning, the storyboarding and such aspects clearly done. It should be deployed, and we will constantly keep you updated on that part.
But what exactly is the company about? Is it on the gaming development side?
It is basically trying to be a content-first kind of approach towards a virtual reality, metaverse, whatever you call it to that, mainly through deployment of not just a game, but a bouquet of games, but which runs on a common storyboard factor, which is based on South Asian mythology kind of an aspect.
Oh, okay. Thank you.
Thank you. We take the next question from the line of Nesir Parekh from Native Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. I'm a bit new to the company, so
I'm sorry to interrupt, sir. Please use the handset. Your audio is not very clear. Please use the handset and speak a little close to your mic. Thank you.
Sorry, hi, is this better?
Yes, please go ahead.
Yeah, hi, thanks. So, yeah, I'm a bit new to the company, so, pardon me for asking some basic questions, but I just want to understand from the services side, right? What are the kind of services that you are offering, and like what is the differentiator, and do you do everything? Do you do are there things that where you do only cash, or what is the proportion between the cash equity that you do?
Services is only for cash, very clearly. So that is the reason why I do services. The other aspect, we had a cash plus equity model, which is the startups part of it. Services is clearly for cash. The main differentiator or the core area of strength that we do services in is that it is all the services projects we have done till date and we want to and wish to do in future is based on our core competence, which is around data science. Now, there are other parts to complement the data science. There is app development. There are things. But that is not the kind of projects we take normally. Right now, going forward, looking at scaling and all with an existing customer, depending on strategic reasons, all options would be on the table because now it's coming as a special service. But till now, our strength has been data science, and that's where most of our traction, past and hopefully future, would be in. That's the way that we do it.
Okay, got it. And this second question was on the investments that you have. So, at what stage in terms of a plan do you plan to monetize it or get out of it, or do you plan to continue hold it? So, what is your exit horizon?
Sorry, can you?
How do you look at exit? Sorry, how do you look at, when do you decide to exit, and some of the investments that you still hold, like when would you plan to exit some of those?
I mean, I guess the real answer would be it's obviously a governed structure where the deliberation happens at the board level and then we do a case-to-case basis. As you know that we are also not that mature a company and the vintage of most of our startups is just getting into the level where exit is an option. As Srini was telling, we entered a very early stage. And we always thought that a 7-year kind of a time frame is the minimum after which we should look at it. Given the current corpus that we have, that is still following. That said, some of them are reaching that kind of a time limit, and we are looking at that option. But sometimes the exits are happening in unfortunate ways. But we will keep on it. But some of the ones that we really bet on, we would like to hold for longer. But again, these are all philosophies. Ultimately, it comes on a case-by-case, opportunity-by-opportunity, strategic aspect at the board level. And as and when those deliberations take place, we keep on informing the market as per proper corporate governance structure.
Got it. And just
to add what Sripan has said, as we enter at a very early stage, generally it is very difficult for you to get an exit at a seed round or Series A level of funding. People who invest during seed round of funding or at a Series A round of funding, they prefer investing into the company for the growth.
Yeah. No, understood.
Hence, the exit would be a bit of a delay. Yeah.
Got it. And can you just talk like some of the investments that have actually, worked out very well for you, like Mihoop or SnapHunt or something? Can you just talk a bit about 2-3 of them in terms of, what stage of growth that company is, and how do you see and current valuations, and how do you see future growth, future valuations for top 2-3 of your companies?
I think you joined a bit late. We covered that in the opening part of it, and it will be a bit unfair to the others who are familiar with the companies and all.
Yes,
actually, all of these are present and all in the corporate deck already. You can just take a look at it, and if there are further questions, you can reach out to us on email and we'll answer it.
Sure. So no, I hadn't looked at the corporate deck. Yeah, but I missed the starting part. I wanted to more understand from the business side of things how they are doing, but I will have a.
I understand. So Srini had just covered how the growth.
Yeah, I will have a look at the recording and if there's some more via mail.
Yeah.
Thank you.
As far as Mihoop is concerned,
Thank you. We move on to the next question from the line of Amutan Iyer, an investor. Please go ahead.
Yeah, thanks for the opportunity again. Can you hear me? Hello?
Yes, please go ahead.
Yes, we can. Yes,
yeah.
we can.
So, broadly, can we say in terms of the valuations of our portfolio company, the current financial year is likely to be better than the past financial year? This is one question. And second is, for retail investors, the Concall is the most important access that we get with the management. So can you please revert to the quarterly Concalls as against the half-yearly Concalls that you had decided for whatever reason? Thank you.
Yeah.
Okay. Sorry, sir. So, yeah, please go ahead. Sorry.
Yeah. As we said earlier, most of our startups they have just started generating revenue, and if you are burning cash and if you are in the process of reaching break-even in this financial year, but in case if you really ask me, the startups are burning cash, it will be very difficult for them to sustain going forward if they are not going to reach a break-even or if they don't raise any further funding. But given the current situation, all our startups are very, very cautious as far as the spending is concerned, because they do have visibility that in next 6 months funding is very tight and very difficult to raise funds. They are trying to be self-sustenance with the existing cash and to reduce the cash burn.
Thank you. A reminder to participants, if you wish to ask a question, please press *1 on your touchtone phone. We take a next question from the line of Rudresh Kalyani from Kalyanamastu Foundation. Please go ahead.
Okay. Can you talk about the cash component which has got drastically reduced compared to the previous H1?
So basically, in case if you look at it, majority of it has gone for operations. Where we have invested on fixed assets, the expenditure has incurred on staffing, because even if you look at the previous year, we did not have a proper office. We have taken a full-fledged office because for last year, 21-22, mostly it was a COVID sort of a situation. The office was small, we were working from home, reduced costing, but whereas from 22-23 onwards, full-fledged offices started. We are expanded our Hyderabad office. We have grown in terms of number of people. So the most of the investment has gone into the operational expenses.
Okay. And one more thing on the catalyst, why it is raising funds from the crowd-funded platform? Why not from the angel platform or from the VC or something like that?
That's the market situation that we are relying on the entrepreneur for. He found it's more suitable to go that way because it's also that people who are coming with funding are also bringing in some expertise which actually can add value to him. That's the main reason for going for that, and it seemed to be the better option given the current scenario.
Mm-hmm. And one more thing on the receivable, which has got increased by almost 70%. Why is that? Why there is a delay on the receivables?
So basically, this is on account of two accounts with Pencil 1.6. As we informed earlier, also there are certain receivables which is there in Pencil where we have decided that would be converted into equity. Since their merger process is on, and which would be they are expecting to be concluded by sometime in the month of June. Post that, they will be issuing equity to Xelpmoc. That's one account, and there is one more account which is Bhutan. In case Bhutan is again Chhattisgarh government project where we are doing there is a delay in payment. That's on one account, because in Chhattisgarh what we are doing is in case if any citizen wants any Aadhaar card, PAN card, or any employment certificate, not the employment certificate, caste certificate, education certificate, etc. So where a person can call up to a toll-free number, the person picks up the calls, and somebody will go and deliver. Again, this everything we have outsourced to a third party. The software part has been taken care by us. The outstanding is on account of that particular account, and which we are expecting to be regularized from Q2 onwards.
Thank you. Anyone who wishes to ask a question may press star 1. We take a next question from the line of Karan Sharma, an investor. Please go ahead.
Yeah, only one more question. Do we have any buyback plan as well? Because, yeah, we invest in startup in anticipation to see growth, right? So at certain level, do we see Xelpmoc doing more than what the startups are doing? So buyback plan, are you thinking of it?
No, not at the moment for sure.
Okay. Thank you.
Thank you. We take the next question from the line of Nitin Shetty, an investor. Please go ahead.
Hello, all of you. Sir, when will the actual growth of Xelpmoc will come back like previous year 2021? Like, even after so much of there is generative AI and things like that.
Yeah, I guess it is. I mean, see, from a skill point of view and all, we probably are suited for this, but other factors have diminished what could have been a great aspect right now. We are working on it, and we obviously want to stick to it. Only thing I can commit is that it is a very hard-working team, and that commitment has not changed, whatever be the market situation. The key leaders are completely sold on to that part, and we will make the best of the opportunity available. When it will grow and all, unfortunately, we cannot decide the whole environment, and we are part of it. So we are trying to inert ourselves as far as possible. We are trying to streamline, trying to get revenue sources, not just focus on passion. That balance, that prudence, that is maturity is coming as an organization. But that said, we hope to see the growth as soon as possible, and no one more than me.
सर अपन जैसे मैं काफी टाइम से आपकी कंपनी से जुड़ा हुआ था, मतलब वे फ्रॉम स्टार्टिंग 2019, तो उस टाइम अपन ऐसे बोलते थे कि मल्टीफोल्ड रिटर्न्स अपन के लिए अपन ट्राई करेंगे, नॉट फॉर दैट 20% रिटर्न और 30% रिटर्न, बट स्टिल मतलब अभी तक वो ग्रोथ नहीं आई है.
That's true, and we obviously have not been able to do that part. That's for sure. But see, at the same time, in equal breath, I had also said that this is our vision, this is what we're going to do, and this is the transparency with which we operate. That has been completely done. And also it was told that these are areas which we think this will happen, but it is high risk area. I guess both those things have to be taken together in unison, correct?
Thank you, sir. We take a next question from the line of Amutan Iyer, an investor. Please go ahead.
So good evening again. Just one query that was not answered, whether the management can commit to a quarterly Concall.
So please give us some time. We will get back to you on that. The reason being why we are saying was why we moved from quarterly to half yearly. Only reason being, like especially for startup, in case if you want to see a uptake or the movement, etc., it requires a certain time. And we found that the quarter on quarter is a very short duration. For example, today we are on 31st May, and next 30 days you are going to finish even your Q1. So what we thought was, in case if we have it in 1 to 6 months, it would be prudent enough to have, and we will be able to give more updates than having it on a quarterly. But given that, we take your solution, please give us some time, we'll get back to you on that.
Thank you. Also, on the tech side of it and on the development side of it, we have a very rich senior management. Do we lack, a question for inquiry, a hardcore sales team or a head at that level, especially for our products and services, of course?
Yes, we do. And that's a gap that we are looking at filling up. That's a very pertinent and important question. Yes. And that is a culture change. We lack that, and we also lack the delivery focus, because innovation mindset and pure services mindset is slightly different. I've talked about this before. I think those are the competencies that we are building, and we may augment those two roles in some ways, or have internal elevations to those focused areas on that. But these are the two things that we surely have to mature on.
Thank you very much, sir. Ladies and gentlemen, we have reached the end of the question and answer session. I would now like to hand the conference over to the management for closing comments. Over to you, gentlemen.
Thanks everyone for joining us for this call. Please do send us an email in case if you have any further queries. We would be happy to answer you. Thank you very much, and that's all.
Thank you, everyone. Thanks a lot.
Thank you, sir. Thank you, members of the management. Ladies and gentlemen, on behalf of Xelpmoc Design and Tech Limited, that concludes this conference. Thank you for joining with us. You may now disconnect your lines.